Be Wealthy and Smart, episode 1146.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about what 3 assets millennial millionaires are investing in. Now, this may come as a surprise to some people, but it actually makes a lot of logical sense that the baby boomers have been very comfortable investing in the stock market over many decades. However, what the millennials experienced was the 2007 and 8 housing crisis, stock market crash, the introduction of cryptocurrency, and many other things. So from their perspective, over their younger lifespan, they have a very different view of how stocks perform. Now, we all know that last year was a very difficult year for stocks. So it's not surprising that millennials are investing somewhere else and not as much in the stock market. Bank of America did a survey of individuals with at least $3 million in assets. What they found was that investors over the age of 43 have about 55% of their investment portfolio invested in stocks. But individuals aged 21 to 42 with at least $3 million in assets have only 25% of their portfolio invested in stocks. Jeff Pisconi, Chief Operating Officer at Bank of America Private Bank, said despite the stock market's recent bounce, the younger generation of investors increasingly believes that a traditional portfolio of stocks and bonds is not going to deliver above-average returns over time. So where are the millennial millionaires investing? The first area that they're investing is real estate. Real estate has been one of the best performing asset classes over the last couple of decades, and it's a well-known hedge against inflation. Even though raw material prices have gone up to build homes and new properties are more expensive, plus what we saw in the pandemic, we're seeing all kinds of reasons why prices of existing real estate have climbed dramatically. And some millennials are very savvy and are using real estate for rental income, whether that's short-term Airbnb, VRBO type income, or whether that is longer-term rental income. They're using it as a source of a business income. In the Bank of America survey, 28% of younger people said real estate presents great growth potential, and 31% of the older surveyed group had the same opinion. But not everybody's investing in physical real estate. People are also investing in real estate investment trusts, or REITs, which are available in ETF form for low fees or in mutual fund form if you want active management. The second place that millennial millionaires are investing is cryptocurrency. That's not surprising to me because over the last several years, we've certainly seen cryptocurrencies get incredible returns. That's one of the things that I wrote about in my book, 3 Steps to Quantum Wealth, is how much cryptocurrencies have outperformed traditional stocks. The proxy for cryptocurrencies is typically Bitcoin, and we've seen how Bitcoin has had success over a long period of time, but we also saw how Bitcoin struggled last year. But when you look over the long-term history of Bitcoin, you see that about every 4th year, it does have a negative return. So it happened in 2022, it also happened in 2018, it also happened in 2014. So it's been on a cycle of every 4th year having a negative return, and then for the 3 years after that, having a strong return. Now, even though I'm not a big fan of Bitcoin, as I said, it is a proxy for the entire cryptocurrency market because it does have the highest market cap and it was the original cryptocurrency. The cryptocurrencies that I like to invest in have more utility. That means they solve problems. Their technology actually does things like send payments and settle promptly for very low fees and much faster transmission. Many of the cryptocurrencies that I've recommended investing in have to do with the banking system. And the banking system has already indicated which cryptocurrencies they're going to be working with in the future because they have required them to comply with what's called ISO 20022 regulations, which is simply a standardized messaging system so that when you're sending money, that messaging system is understood on both sides of the transaction to eliminate mistakes, to make it more efficient, and to have a common language and format that's being used. Other cryptocurrencies' utility includes things like scalability and speed. Cryptocurrencies like Algorand, where the stock market of Israel was built upon that technology. So the real use cases of crypto, having it actually do things, or a blockchain that is actually used and solves problems, which ultimately will reduce costs for businesses, I think that is a no-brainer for future adoption. Of course, one of the downsides of investing in cryptocurrencies is they have extreme volatility. But that volatility is not just on the downside, it's on the upside too. And that's why we've seen spectacular returns in the thousands and tens of thousands of percent for some cryptocurrencies that are growing exponentially. In the Bank of America survey, 29% of younger people said crypto offers great opportunities for growth, while only 7% of the older group agreed. Again, I think that's perspective, and from seeing a shorter window of time that cryptocurrencies have performed and being more open to it, and the younger generation actually adopting it, being more comfortable with it, maybe due to video games or things that they grew up with that the older generation didn't grow up with. So as a result, the younger generation has said they are allocating 15% of their portfolio to cryptocurrency versus the older generation who's allocating about 2% of their portfolio to cryptocurrency so far. I think that older generation is going to come around and invest more. I recommend 5% of your portfolio. I think that's a good number to actually gain from the upside potential. I also think you need to be careful and not go for the ETFs that are available and do this through the stock market or through your stock market account. That's not really investing in the cryptocurrency. You're investing in a proxy for the cryptocurrency. What you want to do is actually own the individual cryptocurrency yourself and keep it locked away in your own possession. That's going to minimize the fees that you're being charged, which are exorbitant in the stock ETF products, and it's going to maximize your security and your ultimate returns that you receive in the cryptos that you invest in. Now, that does take a bit of learning and understanding how to find where to buy and invest in cryptocurrencies, how to sign up with exchanges, how to get cold storage, what cold storage is, and how to put it away and keep it secure. And that's one of the things that we teach in the VIP experience. The third way that millennial millionaires are investing is in private equity. Investing in private equity is investing in businesses before they trade on the stock market. So you're buying them still as a private company. It makes so much sense because you're able to get the shares cheaper and then benefit when they usually get a bump in price when they go public on the stock exchange as an initial public offering. According to the Bank of America survey, 25% of the millennial millionaires aged 21 to 42 invested in private equity and said it was one of the greatest growth opportunities that they could identify, compared to only 15% for the older millionaires. Now, as I said, when you're buying private equity, you're buying in early and hopefully at a lower price than they'll be selling for when they have an initial public offering on the stock market. But you can only invest in those private companies if you're an accredited investor. And that's something that the regulators have insisted upon, and I'm hoping that in the future will be changed so that you won't have to qualify financially to invest in companies like this. To become an accredited investor, you need to have one of the following: either $1 million of assets beyond your primary residence, or $200,000 of income for 2 years as an individual, or $300,000 for 2 years as a couple. Or you can qualify by having your banker, broker, lawyer, or accountant write a letter verifying your net worth. Or if you're a registered Series 7, 65, or 82 financial representative, if you meet any one of those ways, you qualify as an accredited investor and you can invest pre-IPO in businesses. If you've been listening to my podcast for any length of time, you know that I've spoken about the opportunity to invest in the company that has XRP, which is Ripple Labs. Ripple Labs is still a private company. They maintain the XRP ledger, and investing in their company stock provides another way for you to benefit from the future success that I believe they're going to have. The minimum investment size is typically $10,000, and you can invest in Ripple through a company called Link2. And I've left an affiliate link in the show notes so that you can click through, open an account, prove that you're an accredited investor at Link2, and receive a $250 investment credit for future investments. I agree with the Millennial Millionaires that it's an exciting way to invest and be an early bird in tomorrow's high-growth companies. Besides Ripple Labs, Link2 has a whole menu of other companies that are fast growers and what are called unicorns, companies that have already reached a worth of $1 billion, which is quite a milestone. So this stable of successful companies that they have allow you to pick and choose which companies you want to invest in, whether that's in your IRA or in a regular account. So I actually liked the results of this survey and what the millennials are doing. I like the fact that they're invested in real estate. I like the fact that they're invested in cryptocurrencies. And I like the fact that they're invested in private equity. I think these high growth areas and diversifying their portfolio away from just the stock market or from being overly heavy in stocks is a smart thing to do, since these other asset classes have outperformed the traditional stock market returns. There's no guarantee that they will in the future. However, having your portfolio diversified into these kinds of assets, I think, is going to pay off over time. Between now and the next 5 years, I think it will make a huge difference in your wealth building and your potential financial freedom. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And my entire wealth mentoring library can be found on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.